On Business Incorporated today. Nigeria ranks the lowest in agricultural extension ratio in Africa. And Total Energies to sell oil block in Angola. Tanzania and Burundi signed $900 million railway deal. Hello and welcome to the program. I'm Ini John Mekwa. Well, let's get the show started with market numbers, and our first port of call is in Africa. Major markets were mostly positive at intraday as the NGX and the JSE were marginally higher by 0.01% and 0.25% each. On the flip side, the EGX 30 was the only decliner. It fell 0.17%. Kenya closed positive on Friday. And it's a slightly different picture in the Middle East, where markets we track were mostly negative at intraday. In the UAE, Abu Dhabi index dropped 0.14%, while Dubai's main index declined 0.08%. Elsewhere in the region, Saudi Arabia's index was also marginally lower by 0.08%, while the Qatar index was the only gainer, up 0.30%. And this was all at intraday. We move to Europe now, where stocks notched higher today as investors digested a string of corporate news. Well, we have Rob Watts joining us from Berlin for details. Well, Rob, there's a growing concern about inflation in the Eurozone. What's driving that?
Well, at the root of this is the fact that inflation in the countries that use the euro is currently sitting at record highs. It hit 5% back in December, which is, well above the 2% target set by the European Central Bank. There's also huge variation between the member states as well. I mean, for example, in Estonia, inflation is over 12%. So what's driving that inflation in the Eurozone? Well, it all comes down to the economic recovery from the depths of the pandemic. Surging demand has led to shortages of all kinds of goods, food and natural resources, and it's driving up their prices. The biggest rises are coming on the energy markets, with European governments actually having to act to prevent bills from getting out of control. But they are still rising nevertheless at a significant rate. The concern about the inflation situation is increasing as well, because what was thought to be a temporary situation is showing no signs of going away. And actually, we heard that concern reflected in comments from the Vice President of the European Central Bank last week. He said that inflation spike was not proving to be as transitory as the bank had once thought.
And moving away from inflation, now the chairman of Credit Suisse has just resigned, and that's making a whole lot of news. What are people saying in Europe?
So this is Antonio Horta Osorio, and he's resigned from his job at the top of Switzerland's second biggest bank following claims he twice broke COVID-19 restrictions during 2021. Now, the bank has been investigating two alleged incidents, one where he supposedly attended the Wimbledon tennis finals in the UK without observing the UK's quarantine rules, and a second relating to a trip to Switzerland where he reportedly left the country when he should have been observing a 10-day quarantine period then as well. Now, in a statement, Antonio Horta Osorio says he regrets that a number of his personal actions have led to difficulties for the bank, as he put it, and compromised his ability to represent the bank internally and externally. He also adds that he believes his resignation is in the interests of the bank and its stakeholders at a crucial time. Now, what does he mean by a crucial time? Well, Credit Suisse has been going through a tough year. He was actually brought in less than a year ago to firefight the various problems that the major lender has been facing. As recently as November, he set out his plan for doing that, but now those plans are going to have to be taken on by someone else.
Yeah, well, you can say that again, Rob. Thank you so much. But still following that story, less than a year since the Swiss bank chair took over to stabilize the bank, like Rob just noted there. Now we see him stepping down. Well, let's see how the markets in the UK are reading this and the change that it's bringing. Hello, Juliana. Good afternoon. Hello, Juliana. Can you hear me? Okay, I guess we'll still have to hold on a bit for Juliana to join us now. So let's go to the Asian market now. China shares climbed today in a mixed trading session across the Asia-Pacific as official data show the world's second largest economy grew faster than expected, between October and December. The Shanghai Composite added 0.58% to 3,541.67, while the Shenzhen Component gained 1.51% to 14,363.57. Numbers from China's National Bureau of Statistics show that the Chinese economy grew by 8.1% last year, slightly below the market's expectation, which was around 8.4% for the year. In the fourth quarter, China GDP rose 4% from a year ago, topping a poll that was predicted at 3.6%. Industrial production also rose and beat expectations, but retail sales had a more muted growth. The People's Bank of China said it's lowering the interest rate on 700 billion yuan, which is $110.19 billion worth of one-year medium-term lending facility loans to some financial institutions by 10 basis points. We'll go to Wall Street now. Markets in the United States are closed today for Martin Luther King Jr. Day. However, for Friday, major bank stocks declined after their earnings reports, weighing on the U.S. markets as Wall Street notched a second straight negative week to start the year. The Dow Jones Industrial Average slid 201.81 points to 35,000. 911.81. The S&P 500 inched up 0.08% to 4,662.85, while the tech-heavy Nasdaq Composite outperformed with a 0.59 gain. Bank stocks, which had outperformed in the recent weeks as retail interest rates moved higher, were broadly lower as the reports appear to have underwhelmed investors despite strong headline numbers. For the week, Nasdaq shed 0.28%, while the Dow and S&P 500 lost 0.88% and 0.30%, respectively. This marks the third negative week in a row for the Nasdaq. All right, I believe we have Juliana now joining us from our London studio. Hello, Juliana.
Good afternoon, Nini.
Good afternoon, Juliana. Well, Credit Suisse shares was trading around 1.7% lower this morning. Of course, reactions to the resignation. What is it now, and what else is happening around this in reaction to this resignation?
Yeah, pretty embarrassing blunder by Sir Antonio Horta Osorio. He's pretty well known in the Square Mile in London because he was the former chief exec of Lloyds Bank before he was headhunted to try and mop up some of the mess that had happened to Credit Suisse. But following an investigation by the Swiss bank, he handed in his resignation last night. This is because he broke COVID regulations on at least two occasions that we know of. One was when he flew in on a private jet to watch the Wimbledon final, which is a very hotly ticketed seat. I've never been able to get myself one, but he was there, which wasn't a problem. But the problem was he didn't follow quarantine guidelines. And then again, I believe he travelled to one or two countries in Europe. He did a 3-day tour, I believe, perhaps to Luxembourg. Again, if you're flying in and out, that means you're not obeying quarantine guidelines. So he has had to step down. According to the Financial Times as well, he actually used his private jet to fly for a personal holiday in the Maldives. So many scandals erupt in him. And again, like I said, this is not a great time for Credit Suisse. They've had two major scandals. The first was the collapse of Greensill Capital. Remember that scandal involving the former Tory leader, former Prime Minister David Cameron, and also as well investment firm Archegos, which was a huge collapse worth billions. Credit Suisse had also invested in them. So not great for Credit Suisse. He was the first non-Swiss chief exec, and now he's gone. Their shares are still trading down by about that same amount.
All right, and then we also see that Unilever has rejected a £15 billion takeover offer for GSK's consumer healthcare venture. What details do we have about this deal, and how do we expect the market to react to this and the share price?
Yeah, this interesting story. It's actually GSK. So it's GSK that have rejected the £50 billion bid by Unilever. There were actually 3 bids that they put in over the weekend. All 3 of them swiftly rejected. GSK, GlaxoSmithKline, massive pharmaceutical firm. They believe that Unilever has basically undervalued their healthcare arm that invests in companies such as nicotine. Now, we know that because of the pandemic, healthcare has become a very lucrative sector, and Unilever, which is predominantly known for food produce, is wanting to beef up its investment in that area, which is why it put in this bid. At the moment, Unilever shares are down, GSK shares are up. I think investors at GSK are almost certain that Unilever are going to come with a much more healthier bid for them. So I think this takeover bid is still going to go on for many more days now, particularly because GSK are under pressure from activist investors. They want them to get rid of their healthcare arm. I believe they feel there is a conflict of interest with the pharmaceutical and healthcare arm parts of their business. So yes, still an ongoing trading update. And I'll give you the numbers now. The FTSE All Share is up. It's up 0.57%. The FTSE 100 is up by 0.28%. And the FTSE 250, that's down by 0.31%. In the currencies market, the British pound is up on the US dollar by 0.11%, down on the euro by 0.01%, and up on the Japanese yen by 0.25%.
All right, Juliana, thank you so much for those figures. I think we have to wrap it up there now. Thank you so much. Enjoy the rest of your day.
Thanks, Ine.
So let's move to Nigeria now. The African Seed Access Index 2020 report has ranked Nigeria with the lowest ratio of agricultural extension workers to farmers in Africa. The report indicates that Rwanda has the highest ratio of extension workers to farmers, followed by Zimbabwe, Burkina Faso, Zambia, and Mali. Nigeria is at the bottom of the index alongside Democratic Republic of Congo, Malawi, Uganda, and Kenya. An agricultural extensive service offers technical advice on agriculture to farmers and also supplies them with the necessary inputs and services to support their agricultural production. Now, what does this mean to the agricultural sector in Nigeria? We have Mr. Emmanuel Ijewere, Chief Executive Officer of Best Foods Global Limited, to tell us how this has impacted him being a stakeholder in that industry. Good afternoon, Mr. Ijewere. Good to have you on the show.
Thank you very much for having me. Good afternoon to you too.
Yeah. So tell us. Okay, Mr. Ijewere, we'd like to know first-hand information. How impactful is this agricultural extension to farmers in the industry, in the agricultural sector in the country?
The extension workers are expected to help the various farmers who, by and large, and especially a country like Nigeria, are uneducated or have very limited education and have no access to new technologies and new improved ways of doing business. And the part of their work also is to tell them the situation about the weather and how to cope with it, and how to increase their yield, and advise them on how the harvesting should take place. All of these are the kind of things that these extension workers are supposed to do. But you gave the figures about countries like Zimbabwe and so on. The answer to that is a very simple one. Those countries have gone far ahead in agriculture because they did not suffer the kind of disaster Nigeria suffered in terms of oil, the oil issues that we thought was a blessing to us. They have concentrated over the years on agriculture and have kept on improving. We have to first and foremost win ourselves away from the mentality that Nigeria can always continue to make money from oil. The second part is that agriculture itself is practiced in the rural areas. There are very, very few local governments in Nigeria that are functional. That's where agriculture is practiced. If you are unable to get the cooperation of government to provide the kind of support to the private sector, because every farmer is a private sector player, government itself supposed to give it a backing, create the enabling environment for them to operate. And these extension workers are part of that enabling environment, educating them and going further into the future. We have a challenge here. The challenge is basically government needs to be reorientated from the local government to the federal. The private sector too needs to now put its own acts together, realizing that with the population of 200 million, we have a lot more people to feed. And again, we need a lot of foreign exchange for our imports. And this can come from our various produce. So right now, Nigeria is faced with taking a decision as to the way forward. Yes, Nigeria is at the bottom, but I believe that the future is a lot brighter because more and more people are getting to understand what agriculture is about, and the various programs of government are moving in this direction. All we need is synergy between the private sector and the public sector.
All right, and we look forward to that synergy, Mr. Emmanuel Ijero. Thank you so much for sharing your thoughts with us on some developments in the agricultural sector, especially the Agric extension ratio that was ranked. Thank you so much. So let's take a break now. When we come back, we have more conversations on agriculture in Africa. To stay with us is Business Incorporated on Channels Television. Welcome back. You're still watching Business Incorporated on Channels Television. We're still talking agriculture, which we started before the break. Zimbabwe is urging farm owners with unproductive land to form partnerships to bolster agricultural output and slash the country's import bill, with the threat that unproductive land may be repossessed and redistributed. What does this mean to the country's agricultural sector, which is a major contributor to its economy? We have Matt Kindiga, practice leader, Sub-Saharan Africa Front of View, sharing his thoughts with us. Good afternoon, Matt. Good to have you again.
Hi, good afternoon. Thanks for having me on the program today.
So how will this round of land reform, how do you see it affecting output and, of course, the country's growth outlook?
Yeah, certainly. So it is a step in the right direction. It's unclear how effective this will be because it depends on how well it is received by current farmers, companies and individuals that are interested in investing in the agriculture industry. But certainly it does show some resolve amongst or within the government to improve agriculture productivity. It also represents quite a significant step away from, or a continued step in the right direction away from the very disastrous land reforms that took place in the early 2000s. So the government has made increasing steps since the death of Mugabe to encourage investment into the agriculture industry, increase confidence amongst foreign investors, especially in agriculture. So we see this as part of this process. We do expect overall the agriculture industry to perform quite well in Zimbabwe over the next year or so, and this is despite, irrespective of whether these reforms are successful. And this is because the government has already introduced a number of incentives to improve productivity. Also, there have been very favorable weather conditions in Zimbabwe over the last few months, and global commodity prices, including for agriculture commodities, are quite elevated at the moment. So this all bodes well for the agriculture industry in the country, and we are expecting this to positively contribute to economic growth. We are forecasting growth of about 4% this year. So generally, it's quite an upbeat story for agriculture in the country.
And do you see this bringing to higher agricultural production, which could improve inflation rate?
Yes. So Zimbabwe has really struggled with hyperinflation or another round of hyperinflation over the last couple of years. The inflation rate peaked at over 360% this time last year. It has come down significantly. It fell to around about 50% during the end of last year, but it has started to creep up again. Higher agriculture production certainly will contribute to less pressure on food prices domestically, at least. And so we are unlikely to see a return to the very high rates of inflation that Zimbabwe saw last year or the last couple of years, partly because of higher agriculture production. But inflation is heading in the wrong direction again. The rate increased to 60% in December last year. And we are expecting to see the inflation rate rise slightly over the next couple of months and into the rest of this year. We're forecasting an average of 65% in 2022. And part of the reason is because the higher agriculture production impact on food prices domestically will be outweighed by higher imported food costs and the cost of imported goods. And this is a global trend that lots of emerging markets are struggling with. So global cost pressures are very high, and this will contribute to high inflation. The country is also struggling with currency problems, which will weigh on inflation as well. So foreign currency shortages and depreciation of the currency.
And what should businesses expect from Zimbabwe's currency landscape this year?
Well, currency woes in Zimbabwe will continue. That is very clear. We're not expecting a clear resolution. It is contributing to very high inflation in the country. And since the introduction of the new iteration of the Zimbabwean dollar, there has been sharp depreciation, sustained depreciation of the currency. And we also have seen the emergence of quite significant foreign currency shortages. This has contributed to the development of a very vibrant parallel market. At one point last year, the premium of the US dollar on the parallel market in Zimbabwe reached 100%. So certainly not a great environment when it comes to trying to manage the currency landscape. This has prompted the central bank to clamp down on the parallel market, so it's becoming even more difficult to access foreign currency. In terms of the outlook, we are expecting this to continue more or less the same into 2022 and 2023. We're forecasting more depreciation of the Zimbabwean dollar to an annual average of around about $116, $120 Zim dollars per US dollar this year, followed by 150 per US dollar next year. So more currency problems and difficulties going ahead, despite the relatively upbeat overall economic growth outlook for the country.
All right, Matt, thank you so much for sharing your thoughts with us. And of course, we'll do this again next week.
Thanks very much.
Moving on now, Total Energies has signed an agreement to sell jointly with Impex the company Angola Block 14BV to the Angolan company Sumoil. The transaction is subject to the approval of the Angolan authorities. Angola Block 14BV, owned by Total Energies Holdings International BV, owns 50.01%. Impex Angola Block 14 Limited owns 49.99%, and it holds a 20% interest in Block 14 in Angola and a 10% interest in Block 14K. The offshore blocks have been producing since 1999. Net production from Angola Block 14BV was 9,000 barrels of oil equivalent per day last year. Total Energy says its intention is to implement a strategy to high-grade its oil portfolio, focusing on assets with low costs and low emissions. Total Energies is the country's leading oil operator with close to 45% of Angola's operated oil production for operated blocks in development phase. And in the gas sector, Total Energies holds a stake in the 5.2 million ton per year Angola LNG liquefied plant, currently supplied with associated gas from offshore oil fields, and in the new gas consortium, the first non-associated gas project to be developed in the country. Moving to Tanzania now, the country and Burundi have signed an agreement to build a $900 million railway that will connect the neighboring East African countries. The two sides signed a memorandum of understanding to construct a 282-kilometer line from the western Tanzania to Burundi's capital. Burundi remains a strategic partner of Tanzania in many areas, particularly trade. Tanzania has been a strategic partner in mediating political tensions in the country. From the east, we move to the west now. Ghana's widening Eurobond yields fail to account for the West African nation's economic rebound from the fallout from the coronavirus pandemic. The nation's dollar bonds have slumped 10% in 10 days, moving deeper into distressed territory as investors judge that refinancing debt in the Eurobond market won't be an option when the U.S. Federal Reserve hike rates, and some of the nation's budget targets remain elusive. While strong global commodity markets mean that Ghana's economy is expected to grow a respectable 6% this year, the threat of another double-digit fiscal deficit means its already crushing debt burden will almost certainly worsen. That budget hole works out at almost $6 billion, which is 35 billion Ghanaian cedi. Debt as a share of gross domestic product is forecast to reach 85%. Interest payments alone will absorb 46% of the government's revenues, according to credit rating firm S&P Global, the second highest ratio in the world behind Sri Lanka. Well, that's the program for today. Thank you so much for being a part of Business Incorporated. Let's do it again tomorrow. I'm Ini John Mekwa.